the Vesta Securitization Podcast with Stefan Wagner, unlocking investment innovation. Vesta's end-to-end platform enables securitization providers and investment managers to streamline the life cycle of dynamic investment solutions, ensuring better results for their clients and their operations.
Hello and welcome. In this series, we explore the cutting edge of investment innovation. I sit down with leading asset managers who use securitization vehicles to execute their unique investment strategy.
There will always be a market for traditional funds, maybe on the larger side, but I think we can sweep up anything under 100 million. Really, I think the market is huge for us.
The information in this presentation is for informational purposes only and does not constitute an offer, solicitation, or recommendation to buy or sell any financial products. It is not intended as investment, legal, tax, or accounting advice. Always seek the advice of your financial advisor or other qualified professional regarding your investments.
Good morning. I'm very excited here. My guest today, Sean Green, Head of Distribution at Kairos Capital. We've been talking for a while to get you on the podcast. I'm very excited that we finally made it. So thank you very much, Sean, for taking the time.
Thank you for having me.
Where did we catch you this morning? Where are you calling from?
So I'm actually based in Singapore. So I'm originally English, but I've been in Asia for 20 years, 10 in Hong Kong and 10 in Singapore.
I mean, maybe you could share a little bit more for the listeners who might not know you, a bit about your background.
No, yeah. So I actually previously to Kairos, I was in fund administration and fund structuring. So I used to help family offices and fund managers set up structures for fund vehicles, and those fund vehicles could have been for private wealth. So family offices in Asia restructuring their assets into a fund, or helping hedge funds, PE funds, VC funds set up and structure in either Hong Kong or Singapore. And that was mainly through either a Cayman vehicle, typically a Cayman SPC, or if it was a smaller fund, maybe a BVI. And more recently, a Singapore VCC, which is akin to a Cayman SPC. And Hong Kong also has its own structure now, which is called a Hong Kong OFC. But they're all, I would say, corporate vehicles that are structured as a fund. I was also the first person to help launch a crypto fund in Singapore and a tokenized fund in Hong Kong as well.
And what made you switch from the fund side to AMC's, actively managed certificates?
Yeah, I've got to be honest with you, in Asia, AMCs or actively managed certificates, they're not super popular, or they're not well known, let's say. And somebody tried to explain to me about 4 years ago what an AMC was, and they did an unbelievably bad job. And I just kind of dismissed him. And then I met Alessandro, who's the founder of Kairos, and he explained in depth what an AMC is, how it works, the cost structure, the flexibility, the quickness in the way you can deploy and set up an AMC. And all of a sudden, it was like an epiphany, really. I saw all the kind of advantages and all the struggles that your typical fund manager deals with when setting up a fund, and how an AMC would really answer all those questions that they had, or all those struggles that they had. And so for the last 2 years, we've been speaking to fund managers, external asset managers, family officers. I'm really doing a lot of education work in Asia.
And what is sort of usually your, let's say, your elevator pitch when you get the chance to talk to somebody who hasn't heard about AMCs?
Yeah, so I typically say, if you could set up a fund-like vehicle in 2 to 3 weeks with no upfront costs, and it works exactly the same way as a fund, but just easier, and you can have a daily NAV instead of a monthly NAV with a T plus 10 or 20. Would that be something that you'd be interested in?
And most people say, I believe that exists, basically.
Exactly. Yeah.
But maybe a little bit go into the structure that actually Kairos uses. It's a securitization structure, but maybe you can go a little bit into explain what that means, what benefits it brings. And I think particularly you have a very interesting way how it's been implemented. I mean, there's thousands of securitization vehicles, but I think Kairos stands out quite a bit in that.
Yeah, thank you. So, for those who are listening, typically AMCs were originally issued by banks, your UBSs or your Vontobles, your Julius Baers, and more recently, particularly in Asia, Goldman Sachs and Morgan Stanley. But because they were issuing them on balance sheet, then they would typically only do long only, maybe some futures, certainly no leverage. They can't do private assets, and they're definitely not going to do any crypto assets. So I think people came along about 15 years ago and said, all right, we're going to offer something slightly different. And so there's a lot of people in the market that structure an AMC through a corporate vehicle. So they would set up a corporate SPV in, let's say, Guernsey or the Cayman or maybe even Luxembourg, and then they would issue the notes out of or the certificates out of a corporate SPV. Now, I think we'd all agree that from 15 years ago to today, the world has changed drastically, especially after 2008. Now you have things like consolidation risks. You have off-balance sheet problematics. Trying to create an off-balance sheet vehicle is very hard. And also corporate SPVs that now fall under a different tax regime. So the way we do it is we have a Luxembourg securitization fund. And we set up segregated cells or segregated compartments or sub-funds. These sub-funds are off-balance sheet from us. So we're just the arranger of the deal. Kairos Capital is what's called the arranger, or maybe like the salesperson of the deal. Mm-hmm. But if we go bankrupt, then the assets within the compartments do not come onto our balance sheet. And if there's a problem with any of the other ring-fence sub-funds, then they're not contaminated either because they're also ring-fenced from each other. So I always give an example of if Blackstone or BlackRock set up a fund. If BlackRock goes bankrupt or Blackstone goes bankrupt, you don't have to consolidate the fund onto BlackRock's balance sheet. The assets are still there. Maybe you need to liquidate the fund to get your money back, but you don't lose your assets. And now if a bank, for example, sets up an SPV, they have to consolidate that SPV onto their balance sheet.
There's always a challenge for the banks of ensuring that it doesn't need to get consolidated, because that's the super GAU, what I call it. Yeah, I've been through that one at a large investment bank of trying to avoid that risk, and we had clients, to be very honest, on our side, investor, who suddenly stopped their business because a regulator said, "Hold on, you're going to have to consolidate it." So it's definitely something one needs to think about it. And everybody said, "I want my own vehicle." No, maybe speak to Kairos first, use their vehicle, and avoid all that nightmare. You mentioned something interesting here, which you called it a Luxembourg's, I think, securitization fund. Normally, that doesn't come. You don't use the word securitization and vehicle and corporate vehicle and fund. Maybe you can a little bit more explain why, in your case, that's unique, why that is the case.
So the securitization law has been around in Luxembourg since 2004. And the amount of funds that use this law, I can tell you, when we set up, we're 90. So we're on our incorporation number is 090. Now, about 45 of those have already been liquidated. And typically they were used by insurance companies as one-off transactions. But as I said, because tax laws have changed drastically in the last 15 years, when we looked at the tax laws, we said that, okay, if we go down the route of setting up let's say a corporate SPV structure, we're going to we're going to fall foul of these new tax laws. For example, AMCs are not, they fall under if you're issuing them out of a corporate SPV, you fall under the corporate SPV laws or corporate laws, tax law. If you issue it out of a fund, then you fall under the fund laws. So the two completely different laws, the two completely different tax laws. And so our workaround was to use a fund. The downside of that is setting up a whole fund infrastructure in Luxembourg is, I could tell you now, extremely expensive. So
I can only echo that out of experience. Yes.
Yeah.
You touched on something here, which is taxation, and that's obviously something many of the investors are potentially could be concerned with. I mean, I'm not a tax expert, but I think there could be a potential issue with taxation with many other AMCs. I think you called it the tax time bomb. Can you a little bit double click on that one and go into a bit deeper?
Yeah. So after 2008, I think a lot of countries got fed up with people essentially setting up BVIs or Caymans or maybe Guernsey companies, Jersey companies, Isle of Man companies. And essentially saying, look, my company is based in the Cayman or it's based in the BVI or it's based in Guernsey. I don't have to pay any tax in the jurisdiction I am in. So essentially the G20 got together and the OECD, and they said, no, you can't just set up a company above a nightclub in the Cayman Islands and claim that you don't need to pay any tax because the Cayman Islands don't charge you any tax. So they introduced something called substance over form. And substance over form essentially means who is in control, who has the rights to the company, who is managing the company, where are the revenues derived from. That is where it will be taxed, not where the entity itself is. And so from there, there was actually some other laws that came in. One of them was called a foreign controlled company law, CFC. And CFC rules are, if you're, let's say, a German company or you're a Swiss company and you happen to set up an SPV in Guernsey or in the Cayman Islands, you can't just say, I don't pay any tax in Guernsey or in the Cayman Islands anymore, because you are controlling that company. You're in Switzerland or you're in Germany. So you are then now subject to German tax laws or Swiss tax laws. Now, the reason we chose a fund structure is tax-wise, a fund structure is a pass-through structure. So investors always pay the tax on their capital gains, and the manager always pays the tax, or the index sponsor always pays the tax on his or her income that they derive from the product in sense. But a lot of these rules, they were not brought in for AMCs. They were brought in for Google, Microsoft, a lot of the banks that were taking advantage of a lot of these tax loopholes. But it's under corporate law, and corporate tax law changed and developed. So when we came to set up our structure, we said, right, there's a massive time bomb waiting for these AMC corporate structures or corporate SPV structures. So we prefer to use a fund structure. Now, it cost us 10x more to set up, and it took us probably 18 months longer than it should have done to set up. But I think in the long run, it's certainly we can sleep at night. In 2008, you saw everything that the banks used to do. They moved into fund structures, and you saw the explosion in assets under management of Blackstone, BlackRock, Millennium, and essentially the banks became service providers to these fund vehicles. What you didn't see happen is Blackstone, BlackRock, or Millennium set up corporate vehicles for their investors to invest in, because they know that if you set up a corporate vehicle, then you then have to consolidate that onto your balance sheet. And just by putting it into a trust and say, well, now this belongs to the trust, tax regulators and accounting regulation says, no, that's not true. Just because you are the legal owner does not mean you are the actual owner of the vehicle. So if you are taking benefit from the vehicle, if you're the one who decided to set up the vehicle, if you decide what's happening within the company, then you're the one who owns the company. Even though it may say trustee XYZ owns the company, technically you're the one controlling the company. So then therefore you need to consolidate onto your balance sheet. And because it's a corporate vehicle, then you have to pay taxes on your capital gains. Just because you're in Jersey, Guernsey, the Isle of Man, the Cayman, and you set up a company, does not mean that gives you the right to then not pay any tax if you're managing that company from another jurisdiction that has a higher tax rate. For a fund, it's generally a pass-through entity because the investors are taxed in their own jurisdiction wherever they are, because they're holding an investment and then they pay tax on their investment there. But if you're a company, you then fall under the same, as I said before, you then fall under the same laws as Microsoft, as Google, as UBS, as used to be Credit Suisse, obviously, or Lehman Brothers previously. And you can't just say, no, sorry, this company belongs to a trustee and it's got nothing to do with me. Even though I control the company, I take all the benefit out of the company, and I just tell the trustee what to do. It doesn't work like that. Lehman tried it. Lehman wanted to repackage all their bad debt into a company and put it into a trust, and the regulator just said, you're crazy. You can't do this. So in our opinion, there is a big ticking time bomb there, where we believe that a lot of these SPVs that have been set up have potentially got a huge tax liability for the investors. That is not, they're structured as if the world was 15 years ago and not the world for today.
I mean, you are located in Singapore. Maybe you can tell us, the listeners, a little bit what you sort of see in Asia, particularly in Hong Kong and Singapore, and maybe how they differ, the two markets.
Yeah, well, like I say, I lived in both. I've actually spent 10 years in both. Historically, Hong Kong has been an investment banking center and an IPO center, where Singapore was more a wealth management hub and a regional place to do business in Southeast Asia. But typically the IPO market, for example, is bigger in Hong Kong than it is in Singapore. People don't list on the Singapore Stock Exchange, but people want to list on the Hong Kong Stock Exchange.
In Singapore, I've come across, I think it's called the Variable Contribution Fund.
No, Variable Capital Company.
Vehicle Capital, pardon, I apologize.
Yeah.
How does this sort of compare to an AMC?
Yeah, so I would say Variable Capital Company. I'll probably get into trouble for this in Singapore. Maybe I'll lose my visa here. But essentially, it's a Cayman SPC with a Singapore flag. So it's a corporate vehicle.
It is a corporate vehicle. Yeah.
It's a corporate vehicle. It's a new vehicle, so it's only been around for about 5 years, and it's typically used by Singapore managers. So the Singapore MAS, which I guess is a little bit like FINMA, but also the kind of like the de facto central bank, gave a lot of subsidies to promote the VCC. So you find a lot of people in Singapore have a VCC because essentially it was free to set up. But it's still a fund. It still takes 3, 4, 5, 6, 9 months to set up. You still have to go to a lawyer and pay $50,000, $60,000, $70,000 for a template PPM. You have to wait 3 months to get a bank account open. It's very much a slow, methodical process.
I mean, how does then, in a sense, let's go back to the AMCs we talked about, there's on-balance sheet issues. You might have a great brand name with it, but you take clearly the credit risk of that issue. Versus I call them the off-balance sheet, the securitization vehicle, SPVs. what is sort of the preference of that in Asia, or how do people look in Asia at do they understand the risk between them, or is it branding matters more than ring fencing of assets?
No, I think there's two things that when they have used them or they've come across them, typically it's been an on-balance sheet experience. So it's been with one of typically one of the Swiss private banks. And I think what they realize when they use, let's say, one of these on-balance sheet vehicles is that they're very restrictive. They can only do equities. Typically, it's long only. It's certainly maybe US stocks, maybe some Japanese stocks, but it's certainly not going to be Malaysia, Taiwan, Indonesia. It's not going to be anything what I guess some people would call exotic in that sense. There's no private assets, and there's certainly no crypto assets either. But I think once people use one of these bank AMCs, they also realize that once you're in a bank AMC or an on-balance sheet AMC, you're kind of trapped in there. So the on-balance sheet provider then has you. You can't change the broker, right? So if you were being charged 2 basis points for a trade and then it goes to 4 or 6 or 8, you're kind of stuck. You can't. It's not an open architecture. It's a closed architecture, and you take their pricing, and you also take whatever markets they want to provide to you. So I know one on-balance sheet provider. They did Korea, and then all of a sudden their head office in Zurich decided, Korea, we don't want to deal with this. But Korea's a big market in Asia, and they just turned it off. And so you don't have that option to then go and use another broker in that sense. And ultimately, as a manager, I always think you're there to mitigate risk. And if you're using an on-balance sheet vehicle, you simply cannot mitigate that risk. And sure, if you're UBS, is UBS going to go bankrupt? Probably not. But we've had Credit Suisse, we've had Lehman Brothers, we've had Royal Bank of Scotland, we've had Merrill Lynch. So there's been plenty of banks that have gone, or investment banks that have gone bust over the years.
Maybe something you can tell us, maybe don't name names, but of an interesting structure that you put together, how you were able to help that specific client, and maybe something that wasn't possible a few years ago, or is even not possible for an on-balance sheet issue.
Yeah. So we're currently doing a deal where we're essentially securitizing some real estate, and then we are tokenizing the AMC. We work with a licensed digital bank in Singapore. So essentially, they will provide let's say the token issuance, and we securitize the propco, and we issue obviously the AMCs or the notes. And then the digital bank then issues a token so people can subscribe in cash through the traditional route, through their private bank or a brokerage. And we're actually one of the big things here in Singapore is there's a company called Moomoo, who are the interactive brokers of Asia. I think 1 out of every 2 people in Singapore has a Moomoo. So they'll accept that. You can also purchase the notes through them, or if you've got, let's say, digital assets. Let's say you've got USDT. You onboard with the digital bank in Singapore. They do all their KYC. They also do the KYT on the wallet and the stable coins that are being used, and you can subscribe through stable coins as well. So I think that's quite an interesting deal that we're doing at the moment.
And why did the client choose to tokenize it as well?
Yeah, so the client has an investor pool that has USDT.
Okay.
Some of them are, but he also has an investor pool that has traditional
funding.
Yeah, cash. Yeah, and I guess for people who are in digital assets, digital assets, it's a bit of a religion in that sense. So they want to stay in USDT.
Yeah, not many want to come out of it again and back into fiat. I've noticed that.
Yeah. So this is the way of getting access to traditional assets while still being in crypto or stable coins.
And AMCs are getting more and more traction in Asia, but what is sort of your future outlook for what's going to happen there in the industry?
I think it's massive. If I look at my previous background, the complaints were always the same. Why does it take so long to set up? Why am I being charged $50,000 to $100,000 for a lawyer for a template that they probably use with 10 other funds? Why does my fund administrator take T plus 10, T plus 20 to deliver me an NAV? Why do I have to, send a subscription form with a wet ink signature? The list goes on.
Yeah.
And obviously, cost is very prohibitive, right?
Yeah.
It's a couple of $100,000 to set up a fund. It's probably the same to administer it. You've got to go find an administrator. You've got to go find an auditor. It's a very cumbersome process. So when we meet managers, and I say to them, look, if you just want to do something simple, let's say you just want to do US equities, or you want to do a long short, or you want to buy some Malaysian shares, or maybe some Southeast Asian or some Swiss, or whatever it may be, anything listed. We can be up and running in 2 weeks, and you can be raising money you can be investing investor money in 3 weeks. They fall off the chair, to be honest with you. They actually don't believe me until they...
No. And how sort of does that, what you expect, what sort of the vision for Kairos going forward in the coming years?
I think there will always be a market for traditional funds, maybe on the larger side, but I think we can sweep up anything under 100 million. Really, I think the market is huge for us.
I always like to ask a few personal questions, if that's okay. I mean, you probably, as many people in this industry, spend all day thinking about how do I best allocate my waking hours when I'm awake. so how do you deal with it? How do you I call it the information diet? Where do you get your information for? What do you prioritize and what do you deprioritize?
Well, yeah, it's probably a bit boring, really. It's the standard stuff, there's Bloomberg, there's a few podcasts, if you're at the gym or you're running, or we obviously we do a lot of meetings. So if you're walking between meetings, you can plug into the news for 5 or 10 minutes. But it's mostly standard stuff. And then obviously there's more on the tax side and the structuring side, which is what you would call bedtime reading. That tends to put people to sleep quite quickly.
It works very quickly. And the other question I always like to ask is, what is your favorite finance book, or 1, 2, 3? I mean,
yeah, there's a great one called The Quiet Risk. The author is Alessandro Ginestra. I recently read a book called Too Big to Fail. And then also, actually, it was a pretty interesting book called 1929. People always think the market collapsed 80% in 1929, but actually it was over 3 or 4 years.
I mean, I poked you with a lot of questions today. Is there any question you would like to ask me?
Yeah, I mean, where do you see, obviously you speak to a lot of people who deal with AMCs. Where do you see the market go in the next 5 to 10 years?
I mean, number one, I would say there's more and more, I could call markets or regions coming online and realizing it. I mean, all the banks that have been operating in Switzerland, most of them operate outside Switzerland as well and have been taking it there. Also the same thing with the securitization vehicles. So there's new markets coming, I think, who are becoming more comfortable with it. More, I would say, jurisdictions who are historically maybe didn't have a securitization vehicles setups that allow the AMCs are getting interested in allowing that one. And a trend that I definitely see is that it's becoming much more professional in the sense of sophisticated the strategies are being traded. And there's still a significant trend, I would say, of securitizing non-bankable assets. That's definitely, if you see that growing. Sometimes not even to get access, let's say, to commodities or something like this. Not even purely for performance reasons or getting access or exposure, but to actually make it in a security then which you can then turn around. You can get booked, and either it's for inheritance reasons you want to give everybody a share in something. That's a very easy way. They call it then a fractional bond sometimes. Or it's because you can turn around to the private bank and say, can you give me loanable value against this asset?
Yeah.
And maybe the last thing is also, I see a little bit as a trend, is more and more that the vehicle, because it's so easy and affordable to set up, it's getting used also much more to express wealthy individuals' view on how they want their money invested. And because of the macro environment, we see more and more actually people being able to add value through active management back into it. Fantastic, Jean. If anybody wants to get in contact with you, how can people get in contact with you?
Yeah, so they can drop me an email at green@kairoscap.com, or they can find me on LinkedIn if you go to Kairos Capital Singapore, and then you can find me there under people that work there.
Excellent.
Yeah.
Thank you, Sean.
Yeah, thank you very much.
The Vesta Securitization Podcast with Stefan Wagner, unlocking investment innovation. Vesta's end-to-end platform enables securitization providers and investment managers to streamline the life cycle of dynamic investment solutions, ensuring better results for their clients and their operations.
The information in this presentation is for informational purposes only and does not constitute an offer, solicitation, or recommendation to buy or sell any financial products. It is not intended as investment, legal, tax, or accounting advice. Always seek the advice of your financial advisor or other qualified professional regarding your investments.